Hello, welcome back. As I'm making this video, the stock market is down tremendously again, about 2% for the Nasdaq, 1.4 for the S&P, 1.1 for Dow Jones, and as you would expect, the fear is growing, and you can kind of take a look at the fear and greed index that the CNN provides here for us, and it's based off of what is happening in terms of market momentum, stock price strength, stock price breadth, put and call options and all that jazz. And we're sitting at a point where extreme fear is in the markets. And when this happens, this typically is a good time to start accumulating some shares. Now, if we take a look at our stock evaluation tool, you can see that even some companies that were tremendously overvalued, I was just looking at Zoom earlier, Zoom Video Communications, are slowly getting to value territory. And this is extremely surprising. Like Zoom Video Communications, take a look at the max chart. It was over here at some point. 406 was the 1 year high, but you will see that right now it's down at $86 and it's getting a PE of 19, a price to free cash flow ratio of 17, more than likely becoming a value play over here, and I'd never expect it to be one for Zoom, and I will probably make a separate video about it, but it's very, very interesting to see all these battered down companies that still have some value becoming amazing plays after going down like 80%. Now, we will examine what is going on, and I will tell you a few things about bearish markets and crashes, really. One thing that I really want you to keep in mind is what Warren Buffett and Jack Bogle, two very well-known legendary investors, have told us about about stocks. That when stocks are down, you don't really want to be watching the market closely, yet you want to be buying the good stuff, I would add here. So, let's take a little bit of a closer look what has happened and what is happening right now in the S&P 500 and the markets. It's entering bear market territory as stocks fall for the 7th week in a row, which is an amazing decline really, because this has happened about 4 times in the past, the stock market going down 7 times in a row, the S&P 500. You will see here that we're down over 20% from our January peak. The stock market continues to get absolutely demolished here this year. And we're looking at potentially continuing the sell-off, I believe. Right now, again, we are at about 20%. Typically, bearish markets could go a little bit further. I will tell you about it in a separate chart. But you will see over here that, again, today we're crashing and we are plunging into bear market territory. Now, stocks, of course, are heavily on sale, and this is what is important for us. We don't really care about the market conditions because these go up and down. And this is a little bit difficult for new investors, for investors who have bought in the highs. I understand it, but this is not the time to sell. This is the time to wait and accumulate. The time to sell is when the stock markets are climbing, not when they are down like 20%. That's a very, very bad time to sell. And this is why I have always been an advocate of using money that you don't need. This is extremely important. Make sure that you have cash at hand and use the money that you don't need to buy the extra money to buy stock and accumulate over the years, especially when you have sharp sell-offs. I can promise you that big investors, large institutes are heavily buying right now behind the scenes, buying the good companies that are doing well, and will keep accumulating as the stock market goes down. I can pretty much swear that this is the case. You just cannot see it because the stock market is plunging overall. Now, many retailers have been completely annihilated. Target, Walmart, Ross Stores was down 20% again. All of these companies, retailers, have been massively annihilated, and we're expecting a potential continuation of this decline, as I talked about earlier. As you'll see, this is the 4th time on record that this has been happening, 7 weeks in a row of losses. Previously in 1970, 1980, and 2001, actually. These years are a little bit worrisome, as you can understand. But as you'll see, unfortunately, the index was negative over the next 12 months each time. And this could happen again. I wouldn't be surprised if this is the case. Now, whenever a crash of this sort happens, a very, very lengthy, it's not super lengthy, but a lengthy bearish market, there tends to be a flash. So the markets flash, and always, then there is, of course, an increase in the stock prices again, and a massive at that. So, as you can see in this chart, the best times to buy is when the flash happens, like here, for example, or here, or here, or here. Of course, this was the Great Depression over here. This was massive. If this happens, everything is going to be wiped out. This lasted about 20 years to go back to its normal days. If this becomes a thing, that would be insane. I don't expect that to happen, of course. I more or less expect something that happened back in 2000, 2008, something of that sort to happen again. So what is the norm here? You will see that typically a stock market crash tends to last about maybe 14 months, 12 months, a year and a half. That is if there is a crash. If there is like a small bearish period, it can last a little bit shorter, of course, as you will see in between the increases here. But if we're talking about a bearish market, which lasts quite some time, you will see that, yeah, the average is about 1.4 years. So about a year and a half for the most part. The average loss tends to be about 41%. It's basically the bottom line is like the annualized loss here that you can see. And this is what we had back in 2008, the stock crash that happened back in 2008. Will this happen again? Well, it's possible. It could possibly happen. We're already at 20% down, so I don't see why not. Right now everything is bearish. Interest get increased, so it may be wise to start accumulating a bit and just give it time, because there may be a few more months when there's gonna be a continuous decline. So I expect, frankly, if you ask me, I actually expect probably till the end of the year or so that we're gonna be continuing on this trajectory, maybe closing the year near 30% decline or something of that sort, before we enter an increase again in the stock price values, and probably a very steep increase at that. I expect to be a full reversal at some point. Maybe it's gonna be lasting a little bit longer. Maybe it will last a few more months. Maybe it's gonna be like next summer or something of that sort. But it will happen, and when it will happen, it's gonna be booming with a vengeance again, because this is what happens when stock prices go down. They will come back up. And the thing is, stock prices overall are actually not expensive right now. Things are getting better in terms of valuations, and this is, of course, a fantastic buying opportunity, as you can understand. A vast amount of companies have been completely annihilated, and they have dropped like 70%, 80%, absolutely insane. And I actually have a little bit of a table to show you here from from CNBC. Take a look at this. Etsy down for 75%, PayPal 74%, almost 75%. Actually, PayPal is one of the companies that I really want to be adding to my portfolio in this current slump. Etsy is another one that I also like a lot. And Moderna, Under Armour, look at these companies have been completely annihilated during this market crash, and a lot of other companies have been amazing losers here. Biggest Nasdaq losers, Zoom 78%, I talked about it earlier, has lost a lot of its value, and it's actually at value territory right now. Netflix, PayPal, DocuSign, Pinduoduo, Lucid Group. This is actually not a good company even right now, very expensive. But a lot of the companies that were previously, the darlings of Wall Street, are right now completely annihilated, 70 and 80% down, insane value territory for a lot of these ones that are doing well financially, that is, not the garbage, because there is also some stocks that I went by even at a 90% decline. One of these is actually Lucid. So I wanted to make this video just to help a little bit, because I understand that people can be fearful. It sucks when you are seeing your account go down in value if you are owning stocks. But what you should be doing is pretty much forget about what you own, forget about how the prices are moving right now, and use your extra cash to buy more value stocks. And in this channel, the channel that I'm operating on, I am creating videos about adding value, and I'm talking about the companies that can actually add value to your portfolio over the long run, and not just buying the companies that can just go up in terms of sentiment or go down a lot in terms of sentiment, as you're seeing with companies like Peloton, for example, going down like 80% or something of that sort, because they don't have enough value to support the operations of the business, and so they eventually go down when there's a bearish market, and they could continue going down. And the problem is, when you are buying a company that doesn't have value, it won't go back up again at that value if you are entering bearish territory, and you never go back to these valuations that were absolutely insane, the bubble basically before that. But if you are buying companies like companies that we have talked about a lot in this channel, Facebook, Alibaba, Intel, maybe even Foot Locker, these kinds of companies, when retailers come back to normal, these companies are value companies and are actually very undervalued right now, and this is exactly when you need to be buying those. So I understand it can be a little bit scary. Just forget about it. Keep buying stuff that is actually valuable, and just ditch all the bad stuff, all the companies that are losing money, and forget about them. Let them burn, really, and just buy the good stuff and wait. Just wait. Give it time, and always have money on the sides to operate your daily life. Do not have the requirement to sell any stock at any point in order to operate your daily life. That's a bad idea. Just let your stock grow over the years. Let it do its thing. We're probably going to be going down a little bit. There is a flash happening right now, which, remember, is a fantastic buy opportunity happening about once every decade. Remember, from this chart, it happens about once every decade. It lasts about 1.5 years, maybe a little bit less, sometimes a few months, but overall it always comes back. And yeah, it just needs to take its time to flash until we head on to positive territory again. So remember that, and don't be panicked. Don't be like the stockholders that are actually selling everything because they are panicked. Just sell the bad stuff, keep the good stuff, and keep on going. Thank you for watching this one. Hope it appeased your minds a little bit, and I'll see you in the next video, guys. Bye bye.